Okay, here we are with part 2 of the recording. Sorry about that. This will be split up into 15-minute increments, so at least you can download them in bites, in pieces, and you can review the piece that makes the most sense for you. So anyway, back to the first problem. So as you can see, we've got our estimated total fixed manufacturing of 10,000. We know that our variable portion is $1 per hour, per labor hour, and we've estimated that to be 2,000 labor hours to be worked in the month. So this equation is just multiplying the 2,000 hours times the dollar and adding the $10,000 in fixed manufacturing overhead. And so that gives us a total manufacturing overhead of $12,000. And then if we divide that by the number of labor hours that are estimated to be worked, which is what this equation does, takes our total of 12,000 and divides it by the 2,000 hours that are estimated to be worked, that gets us our predetermined overhead rate of $6 per hour. Okay, then the next question asks, well, how much manufacturing overhead then was applied to both of the jobs? So we're going to look at how many direct labor hours were worked, because that's how we are applying the overhead to each job. We've got this bucket of overhead costs. We have to allocate it to each job for the month. And how are we going to do that? We're going to do it based on how many labor hours they worked for each job. So we know that $6 is our predetermined overhead rate. We'll multiply that times the number of labor hours worked for job P, and that gets us 1,400 labor hours times the $6, gives us a net result of $8,400 for job P. For job Q, it's the 500 hours times the $6 predetermined overhead rate. That gives us a result of $3,000 in manufacturing overhead that's allocated to that job. Okay. Question 3. What is the direct labor hourly wage rate? This really doesn't matter which job you pick to calculate this, because it's going to be the same either way. And in this case, what you're going to do is you're going to divide the direct labor cost by the number of hours that were worked. So they're keeping track of each hour worked by their direct labor employees, and they've accumulated $21,000 in direct labor costs for job P, divided by that 1,400 hours, and you get $15 per hour for the direct labor. And if you do the exact same exercise for job Q, where you divide the $7,500 in direct labor costs by the 500 hours, you'll also get $15 as the direct labor hourly wage rate. Okay. Question 4. So if job P included 20 units, what is its unit product cost? What is the total amount of manufacturing costs that's been assigned to job Q as of the end of March, including the applied overhead? Okay, so in this problem, first we're going to tackle the first question. If job P included 20 units, what is its unit product cost? So this equation, we have to include the direct materials, the direct labor cost, as well as the manufacturing overhead we allocated to job P. Okay, we're going to add those 3 buckets of cost together, okay, and divide it by 20. That gives us this $2,120 per unit. Okay. Now, in job Q, the only difference is that we're not going to divide it by number of units, because we're not given the number of units. All we're asked is what's the total manufacturing cost for that job. And again, we're going to add up direct labor, direct materials, and our manufacturing overhead to get to the total manufacturing product cost, the total product cost or total manufacturing cost assigned to job Q of $18,500. Okay. So if we were to say, let's say they also had produced, just for the sake of argument, or just as an example, not that we're given this, but let's say they also were able to produce 20 units, that would give it a unit cost of $925 per. Now they're not done with this job, but let's say they've completed 20 and maybe the job asks for 25 units. They're going to make the other 5 units in the next month. You would assume that the remaining 5 units would also be produced at a total cost of $925 per. Okay? But anyway, this total amount is just the total production cost for that job. Again, it's the direct materials, direct labor cost, and the manufacturing overhead that's been allocated to it. All right, question 5. Assume the ending raw material inventory is $1,000 and the company does not use any indirect materials. Prepare the journal entry to record raw material purchases and the issuance of direct materials for use in production. So this is the first journal entry, and basically we're just going to say that the company, we're assuming the company bought raw materials and they bought them on credit. They didn't pay cash, so they bought $22,000 worth of raw materials, and so they debited raw materials for $22,000, and then they credited AP, or accounts payable, for $22,000. You might say, well, wait a minute. We know if you go up here, again to the data that we were given, that the direct materials that they used were actually 21, the 13,000 plus the 8. Well, because we know that we're told that they've got a $1,000 ending inventory balance, you have to increase it by that $1,000. So that's why their purchases were actually $22,000. So the next journal entry will move $21,000 worth of raw materials out of the raw material bucket and put it into the work in process bucket. And you can see that by this journal entry, where you debit the work in process for $21,000 and you credit raw materials for $21,000. Okay? Go ahead and adjust that. All right. Next question. Assume that the company does not use any indirect labor. Prepare the journal entry to record the direct labor cost added to production. Okay, so we know, going back to our problem up here, that under direct labor they had $21,000 worth of direct labor cost for job P and $7,500 of labor costs for job Q, to give you a total of $28,500 in direct labor costs. So that is the amount that we're going to journalize. And here in question 6, we're going to move that into work in process. Okay? And we're just going to debit work in process for the $28,500 and credit wages payable for $28,500. Again, both of these jobs were accumulating all the costs into work in process as we're producing them. Okay, that's kind of the intermediate step until we move it over into finished goods once we're completed with the job. Okay. Question 7. Prepare the journal entry to apply manufacturing overhead to production. Okay, so going back to the question 2, where we calculated how much manufacturing overhead was applied to both jobs, we know that the total amount was $11,400, right? Because it's $8,400 for job P and $3,000 for job Q. So going back down to question 7, we're going to debit work in process. Again, work in process is where we're accumulating all of these costs until we finish the jobs and then they move into finished goods. So we're going to debit work in process for $11,400 and credit manufacturing overhead for $11,400. Okay, now question 8. Assume the ending raw materials inventory is $1,000 and the company does not use any, apologize for that, that's a work email, let me get that out of the way. And the company does not use any indirect materials. Prepare a schedule of cost of goods manufactured. So, here is our schedule for direct materials, and our beginning inventory balance for raw materials was 0 because that was given at the beginning of the problem, that we started with 0 work in process, 0 raw material inventory, started with a completely clean slate. We bought $22,000 worth of raw materials. Okay, so that means we had $22,000 of raw materials that were available. We are deducting $1,000 because of ending raw material inventory, because that's what was given to us in question 8, that $1,000 is our ending inventory balance. That leaves us with $21,000 of materials that were used in production. Okay, we've now added our direct labor amount of $28,500, and we're also adding our $11,400 of manufacturing overhead that's been applied to the work in process inventory. Okay, these numbers we were already given, right, in the previous problems, and then that gives us a total manufacturing cost of $60,900. We add any beginning work in process, which was 0. And that leaves us again with a balance of $60,900. Now our ending work in process inventory is $8,500. You might ask, well, where did you get that number? That $18,500 comes back to this number in question 4. Okay, remember, way at the beginning, and let me see if I can switch over to the, whoops, here we go. Remember, it said that job P was completed and sold by the end of March, but job Q was incomplete at the end of March. So job Q is our ending balance in work in process, okay? Because it's not done yet. Anything that is, that's why they call it work in process, right? Accountants aren't particularly creative when it comes to the titles of the accounts that we use. We like to keep them very clear and distinct. So $18,500 is the remaining balance in our work in process account, because that's the job that is in process. That's the work that we still have in process. Okay, so we know that should be our ending work in process inventory, which leaves us with a cost of goods manufactured of $42,400. Okay, now question 9 asks, prepare the journal entry to transfer costs from work in process to finished goods. Okay, so that's a debit to finished goods. Okay, we're going to move it out of work in process and put it into finished goods. And that's why we journalize a debit to finished goods and a credit to work in process. Okay, so now let's look at the T account for that. And that's what question 10 is asking. So our beginning balance was 0. We added the $21,000 of direct labor. We also added the $21,000 of direct materials into work in process. Okay, the $28,500 in direct labor, as well as the $11,400 of manufacturing overhead. Okay, now we're going to reduce that account by the $42,400 that we've moved into finished goods. Okay, that's the credit, and then our ending balance will give us $18,500. Okay, question 11. Now it says prepare a schedule of cost of goods sold. Okay, we have our beginning finished goods inventory balance, which was 0. Okay, we added our cost of goods manufactured, which was calculated in question 9 of $42,400. That leaves us with cost of goods sold that were available for sale of $42,400. We have no finished goods inventory at the end of the month, because everything we finished we actually sold. That's what it said. It was completed and sold in the month of March, so we have nothing left in finished goods, leaving us with an unadjusted cost of goods sold balance of $42,400. Okay, so I'm going to stop this portion of the screencast, and we will continue with the rest of the problem in the next section.